Hello, YouTube and fellow bullion stackers. This is the inaugural episode of Turbo's Bullion Online News Edification, or T-Bone for short. It is also the 23rd week of 2025, thus the episode reflects the week number in the title. T-Bone recaps the top 5 gold, silver, and platinum market headlines from the previous week. Whether you're a seasoned gold stacker, silver bug, or looking to diversify with platinum, this one's for you. Before we dive in, let's check the current Kitco spot prices as of today, June 8th, 2025. That would be Sunday. Gold is at $33.11 per ounce. Silver is at $36.04. And platinum is at $11.80. And that brings the gold to silver ratio to about 92.25, which might suggest silver is undervalued relative to gold. Something to keep in mind as we explore today's stories. We'll cover the main points of each story and how they impact gold and silver stackers like you, looking at the economy, geopolitics, mining securities, futures markets, and anything affecting the future price of bullion. As always, I'll be showcasing some close-up shots of my latest silver and gold bullion additions while we break down this week's market movers. I am Turbo, and this is Turbo Stacking, where we stack with purpose. Let's roll. Leading the pack this week, silver has smashed through $35 per troy ounce and held steady for 2 full days. A spot price run that's turning heads. This isn't just a blip. It's the highest level we've seen in the current market cycle, and it's a big deal for silver stackers. Well, what's driving this? Demand is soaring. Think green tech like solar panels and electric vehicles gobbling up silver, while supply is squeezed by mining hiccups in key regions. Historically, silver last hit $35 back in 2011 during a bull market fueled by different forces. Today's breakout signals a new era, with analysts eyeing a potential climb to $50 if this momentum holds. For stackers, this could mean higher premiums on silver bars and rounds, but it's also a chance to ride a bullish wave. Stack now or wait for a dip? That's the question. When there's a breakout to a new trading range, the stock needs to maintain the breakout for at least 3 days in a row before declaring it a buy opportunity. Otherwise, it could be a bull trap fake as opposed to a breakout. That puts us waiting for the close Monday to see if silver maintains its hold above $35 an ounce. If so, that will be my cue that silver is indeed heading to $40 to $50 in short order. If it doesn't hold, I believe the bull trap fake will make the price dip significantly, possibly even sub 30 range before establishing the next run up. Next up, gold is on the move, climbing steadily as geopolitical tensions flared between major powers this week. Investors are flocking to gold as the ultimate safe haven asset, pushing the spot price to fresh highs. For gold stackers, this is textbook. When the world gets shaky, gold shines. If you're building your gold stack with coins or bars, this surge could mean pricier buys ahead, but it also boosts the value of what you've already got. Geopolitical risks aren't cooling off soon, so keep stacking that bullion. Story 3 hits silver stackers right in the stash. Mining disruptions in South America, think strikes and logistical snags, have tightened the silver supply this week. With output from one of the world's top regions at risk, the market's feeling the pinch. This ties straight into that $35 an ounce spot price run. Less supply, more demand. It's a recipe for higher silver prices. If you're hunting for silver bullion, act fast. Dealers might hike prices as this plays out. Your stack could get a value boost as well. Number 4 takes us to the futures market, where gold and silver contracts went on a wild ride this week. Traders are jittery, and the volatility spilling over into spot price expectations. For stackers, this is a heads up. Big swings in futures can signal buying windows if prices dip, or a cue to hold if things get too choppy. Watch those spot price trends at your local dealer. They'll feel the ripple soon enough. Rounding out the top 5, central banks made waves with hints of interest rate hikes this week. It's a mixed bag for bullion. Higher rates can weigh on gold, but silver's industrial demand might keep it afloat. Gold stackers, brace for potential spot price pressure. Silver stackers, that $35 per ounce run could get extra legs from industrial strength. Either way, here's a Turbos Pro tip. Diversify your precious metal stack to stay ahead of these economic shifts. Diversify your stack. Use gold for stability, silver for growth, and don't forget our next segment and platinum's potential role in your strategy. And now, a bonus segment for all you precious metal enthusiasts. Let's talk platinum. This week, platinum has made headlines with a significant spot price jump, breaking through key resistance levels. As of June 6, 2025, platinum is trading at about $11.80 per ounce, surpassing its 2024 high of $10.95 per ounce. This breakout is catching the attention of investors, and for good reason. Why the price jump? Supply crunch, rising demand, and a technical breakout. Over the past 6 weeks, platinum registered inventories at the NYMEX have plummeted by 44%, and eligible inventories have dropped by 32%. This sharp reduction in supply is a major driver pushing prices higher. Platinum is essential in the automotive industry for catalytic converters, and the jewelry sector is booming, with Q1 2025 sales up 300% year over year. Plus, its role in green tech, like hydrogen fuel cells, is set to increase demand further. Platinum has broken out on multiple time frames, weekly, monthly, and even yearly, signaling a strong bullish trend. Analysts are now watching the next resistance level at around $1,300 per ounce. Adding fuel to the fire, there's a significant development in the Chinese jewelry market. Recently, many Chinese jewelry makers have started shifting from gold to platinum. This trend is driven by changing consumer preferences, as platinum's durability and modern appeal resonate with young buyers. Additionally, platinum's lower price point compared to gold in recent years has made it an attractive alternative for cost-conscious manufacturers. China is a powerhouse in the global jewelry market, accounting for a substantial portion of platinum demand. This shift could lead to a notable increase in platinum consumption, further tightening the already constrained market. So, what should investors expect? Well, short term, the current momentum driven by supply constraints and growing demand, including this new boost from China, could push platinum towards $1,300. However, expect some volatility. Profit taking or market swings might cause temporary dips. Stay nimble if you're stacking platinum. Long term, the outlook is bright. A structural supply deficit combined with rising industrial investment and now increased jewelry demand from China positions platinum for sustained growth. Many analysts believe it could outperform gold and silver in this bull market, making it a smart diversification play for your precious metals portfolio. In short, platinum's price surge is fueled by shrinking supply and robust demand, now amplified by the shift in the Chinese jewelry market. Short term, we're looking at upward momentum with some bumps, while the long-term forecast is bullish thanks to solid fundamentals. If you're a stacker eyeing diversification, platinum might just be your next shiny move. That's your top 5 bullion market stories, plus a platinum bonus for the 23rd week of the year 2025. From silver blasting past $35 and holding strong, to gold flexing its safe haven muscle, mining woes, futures chaos, central bank curveballs, and now platinum's breakout. It's a wild week for stackers. So stay sharp, stack with purpose, and let me know your thoughts below. Are you buying silver during the breakout? Are you holding your gold? Are you adding platinum to your stack? Don't forget to like, subscribe, and smash that notification bell for weekly bullion updates here on Turbo Stacking. As you were, Turbo out.